Welcome to the inaugural episode of the 4pm Fill, your fill of the market this week. Everything you need to know before you get stuck into the weekend. Sam, it's Friday afternoon, the markets are closed. What are we knocking off with?
Jack, we're knocking off with some garden dries. Was it our first choice? No. Was it in the fridge? Yes. So look, keen to enjoy a delicious beverage with you and talk some markets.
Indeed. So let's get into it. Samo, what happened in the markets this week?
Well, Jack, it was a pretty tepid week on the markets all around. You can see all the major indices on the screen there hanging at about 0 to 1%. I think this has been led by a lot of uncertainty following the tariff saga earlier this week. The big outlier, of course, on your screen is Bitcoin. Honestly, I think this is just a bit of a correction following a huge run-up in crypto prices since Trump's election victory.
Yes, and what about the year to date, Sam?
Well, Jack, our ASX 200, as well as major US indices, all hovering at around 3 to 4% for the year. Interestingly, it's the UK's FTSE and the European indices that are leading the way at the moment. They're up this year about 7 and 8% respectively.
Yes. Well, thanks, Sam. And now into our first segment, Headline of the Week. So, Sam, last Saturday, President Donald Trump signed executive orders for 25% tariffs on Canada and Mexico, along with China at just the 10%. The market reaction was generally negative. The S&P 500 shed about 1.7% upon open on Monday before paring back losses following the announcement that Trump had agreed to pause the tariffs for a period of 30 days in exchange for tightened border security commitments by Mexico and China. Meanwhile, the 10% tariff on China has now come into effect. China are currently considering retaliatory measures. So, Sam, a rollercoaster ride on the market this week. What did you make of it all?
Well, Jack, I was on the public record for saying that Trump wouldn't impose significant tariffs, so as not to compromise the viability of his economy and the stock market. So you can imagine I was a little bit red-faced on Sunday morning when I heard that Trump had signed these executive orders, particularly with his close ally and neighbour, Canada. However, I was feeling a little more vindicated when Trump put a halt on those decisions on Monday.
Indeed. And so the question on everyone's lips, are the tariffs real or are they just a bluff?
Well, Jack, I'm going to stick my neck out and go on the public record again and say that it's a bluff. Look, we know that Trump thinks tariffs is the most beautiful word in the English dictionary, but we also know that Trump ran on an election promise of lowering inflation, so I can't see him running the risk. I think his willingness to back down from Mexico and Canada shows that this is more of a negotiation tactic and a show of strength.
Yes. All right, well, it's time for my hot take.
All right, time for Jack's hot take. So, Jack, what are you fired up about this week?
Sam, I'm looking at crude oil price, and specifically, I think that price is going to come down and way down.
Down, okay, that's a hot take, Jack. Can you talk us through it?
Yes, well, I was probably one of the few Australians who would have watched the National Prayer Breakfast in the US, where Trump outlined a very clear intent to bring down the price of oil, boost production, as a matter of urgency and priority. Interior Secretary Doug Burgum has made a pretty rapid start to fulfilling that election promise to the American people, and signs do very much point to the US substantially boosting output in these early stages. Now, China did introduce tariffs on US oil, but the impact of this manoeuvre is probably negligible, as China aren't really a significant importer of US oil anyway. Meanwhile, I deem Russian supply constraints as being a decent chance of easing in alignment with the conflict, showing positive signs of ending. And furthermore, I don't subscribe to the belief that Iran's production will be diminished, as Trump outlined a hard stance on Iran if it fails to halt their nuclear ambitions and projects. And Trump stressed his desire for a stronger, healthier relationship with Iran. So long as they comply with his request, which is surely the logical outcome, I don't see their production diminishing. All in all, a perfect storm for that oil price to come crumbling down, and in doing so, ease the cost of living pressures, not only for Americans, but globally.
All right, Jack, that's one hot take there, and we'll be able to watch that in the coming months, and we'll definitely hold you to it.
Please don't. Anyway, let's get to the next segment, Sam's Market Insights. So, Sam, what have you got for us this week?
Jack, I want to talk to you about something I've been big on these last few months, and that is the valuation gap between small and large cap stocks. So this gap is getting bigger and bigger. Enterprise value to EBITDA for S&P 500 stocks is currently 17.3 versus 12.3 for small cap stocks. What's really interesting, Jack, is that in our local market, small cap stocks are actually more expensive than large cap stocks. You can see on the chart that the Australian small ordinaries is trading at 15 times compared to 11.8 times for the ASX 200.
So what do you think is causing this valuation gap in the US specifically?
Well, Jack, I think it's mainly two things. Firstly, the Magnificent 7 stocks in particular. They comprise about 33% of the S&P 500 index, and they trade at huge multiples. For example, Nvidia, they trade at about a 42 times enterprise value to EBITDA multiple. So that's dragging up the rest of that index. Secondly, it's the indiscriminate passive investing, which is seeing huge flows into the S&P 500, leading to a divorce between the intrinsic fair value of a stock and its actual trading value.
Yeah, it's very interesting, Sam. So how can investors take advantage of this?
Well, Jack, I think for Australian investors, US small cap stocks are looking cheap, not only relative to the S&P 500, but also relative to our own small ordinaries index locally. So if you're looking for value, I think the US small cap segment is looking very attractive right now.
And of course, Samo, your company, Savannah Asset Management, does have an ETF for that, I believe.
We do indeed, Jack. The Savannah US Small Caps Active ETF. Our audience can go check it out.
Well, that's a wrap for this week's 4pm Phil. Might be time to grab a schooner at the local. And of course, if you enjoyed this episode, make sure to like, subscribe, please drop us a comment. Let us know what you thought. Let us know what's your take on the markets this week. We'll be back next Friday junk time. See you then.
Cheers.
I don't mind that. I don't mind the finish.